Surprised at how much people spent.
The customer's really resilient. Even when bad things happen, the customer comes back. What you have to believe now is the economy's getting better. If it is, the things that we did last year that we didn't like bad weather and higher Social Security taxes, are going away. It's working our way.
One thing we've been banging the table about here on Street Signs is how much everybody's heating bill has gone up, right? In some cases, double, triple. It hurts everybody across the spectrum. But it's not hurting retail?
It's temporary. It's only right now. These investors are looking at what happens in spring and next fall.
And plus, you only get your heating bills once a month, right?
Right. There's only pain for one day, and then you just move on and go back to the mall.
No, it is.
But a lot of pain.
My heating bill, nobody cares.
No,
my
I know.
heating bill tripled.
But you probably pay very close attention to it on an ongoing basis.
I got the thermostat at 62. The dogs are shivering.
I pay attention when my bill comes that one day. I'm like, ooh, I might not spend for a couple of days.
Hundreds, you're rolling
you use some retail
I'm just nice and cozy all the time
to make yourself feel better about it.
Yeah, right.
You put a layer of blubber on like I do for national protection. Jan, thank you very much. You know what I'm talking about. No, you don't. With all due respect to the show, 2 hours ahead of ours, let's turn our focus to what we're calling slow money. The slow money market. For the past 2 years, stocks, like that turtle, have simply just gone higher. I'll stop speaking slowly. Are there any stocks left for buy and holders to, buy and hold for the long term? Joining us, all-star fund managers Eric Marshall and Don Wardell. Eric, first to you. We kind of had a little fun with that because we always talk about trading. Okay, slow money market. What's to buy right now?
Well, at the Hodges Funds, we're focusing on companies that have a high degree of fixed cost leverage in their business models and that are experiencing pricing power. One that we like there is a company called Eagle Materials, which is a way to play the recovery that we see in the construction markets. They make cement and gypsum wallboard. They're a low-cost provider in both of those areas. The company has made strategic investments here over the last few years that we think will double their earnings power at the peak of this cycle compared to the peak of the last cycle. And even though the stock has moved, we still see considerable upside in it from here. We think ultimately they could have anywhere from $10 to $12 of earnings power at the peak of this cycle.
And of course, we're going to be talking more about, building materials and housing in just a moment's time. But Don, I want to get to you. You do believe that the market will go higher in the next 12 to 18 months. But if indeed slow and steady is going to win the pace, what stocks will win for you?
Well, we really like Rockwell Automation. The tenets of our philosophy are threefold: dividends, valuation, fundamentals. Fundamentals will get you from point A to point B with a lot of volatility along the way. But Rockwell Automation, we think, is on the front end of a super cycle for automation. You're seeing CapEx, spending expectations rise. Rockwell's in a great position from that standpoint, and we think they can earn well north of $7 a share. Put a 20 multiple on it, that gets you well north of $140 a share. And, the stock at 120s, that still gives you a lot of upside. We really like that story for the next 12 to 18 months.
And certainly that story makes a lot of sense. But, Don, there is one particular stock pick I've got here on my list for you that does scream a warning sign, and that is an 11% dividend yield for Seadrill. Quite often when you see a stock that has such a high dividend, it's because there are problems elsewhere, and that's the only way they can get an investor to be interested in them. Is this the case for Seadrill?
No, we don't believe so at all. In fact, yesterday, Seadrill raised their dividend to $3.92 annually. We think that the near-term deep water oil drilling fundamentals are weak. I don't discount that. I won't argue with you about that at all. I think that over the next, over the next 12 to 18 months, you're going to see continued demand for deep water drilling, and Seadrill possesses the most high-spec, technologically advanced fleet out there today. They get the leading-edge day rates. We expect their EBITDA to grow, and we expect this dividend is quite sustainable and should be very attractive to investors who want some long-term share price growth potential as well as income to get paid while they wait for maybe some very near-term weakness in the space. So we're very attracted to Seadrill at this point.
Okay, Eric and Don, thank you very much for joining us in this slow market. A nice slow jab, by the way. I've got the voice for it, but you've got the moves.
I have neither the voice